Despite various challenges such as increased militant attacks, heightened political instability in some countries and a weakening of currencies as oil prices drop globally, investors are still bullish about the opportunities the continent offers. Hello and welcome to the CNBC Africa special debate. I'm Kukuletu Cele. Now, over the next hour, we're going to dissect, debate and unpack the challenges and opportunities associated with investing on the continent. In studio with me to help drive the discussion, I have Chris Paizis, Head of Market Distribution for Greater Africa at Barclays, Keith Nichols, Managing Director for Sub-Saharan Africa at Thomson-Reuters, Claudia Furiel, Director NIPAD at South Africa's Department of Trade and Investment, and joining us from our Nairobi studios is Ali Khan Sachu, founder of Rich Management. Lady and gents, thank you so much for joining us this afternoon. Maybe let's delve into 2015 as a year overall. It is one that has been highlighted for significant economic growth for the continent, estimations ranging between 5 and 6%. But from a political sphere, lots of elections also unfolding in many economies, the likes of Tanzania and Nigeria. Keith, if we come to you, how important are these elections, especially given the political instabilities that are so consistent with the continent?
No, they're very important for global investment as well as African investment. People, when the global investors and African investors, as you mentioned, the growth rates are very, very high. And so they inevitably look at Africa as an opportunity, and then they immediately look at political instability and other risk to weigh the return that they're going to face there. And when you look at these elections, the more that we see about the elections, the more peaceful transitions of power in Africa, it leads to political stability and leads to more growth in the continent. And I think the way the elections are going so far, the way they're being covered by news organizations such as Reuters News, such as CNBC, et cetera, the more information, the more interest there is to make these elections go well.
Chris, you often speak to some of your counterparts from a global scale. The questions that maybe they might ask you about political stability on the continent, are they still concerned?
Yeah, I think you need to be cognizant of the fact that people have a good understanding globally of the fact that a lot of our markets in Africa are young democracies. And as such, you would expect some volatility. So I think the fact that for the past 20 or 30 years we've had relative stability across the continent has been a really positive sign for international investors.
This often highlights the role, naturally, of governments in various states across the continent for the importance regarding regional integration. Claudia, this is where I want to bring you in. We always hear about this, and so often we hear that the East African communities are actually making significant progress in this regard. Is that a benchmark that the rest of the continent should hope to meet and attain?
Absolutely. I think if you look at some of the achievements that we've done or made in various regional economic communities, it's a big indication of the importance of the regional economic integration agenda that the continent has in place. And specifically, that's looking at how do we create the self-reliance, how do we create a bigger market for African countries, how do we improve inter-Africa trade, how do we improve interconnectivity between member states and the regional economic communities, because that is basically aimed at putting Africa on a path of sustainable development and inclusive growth, as opposed to the current commodity-driven and consumption growth that we've been experiencing over the last decades. Regarding
this interregional growth as well as interchange, how do we, you mentioned those poignant questions, how do we drive this growth, how do we drive this demand, how do we ensure that the infrastructural development is there? Maybe if you can highlight the initiatives that governments need to put in place and policies as well that they need to implement in order to allow free trade from their borders.
Look, absolutely. Continental integration has been at the forefront of the highest agenda at the African Union level. And that because we've got very small scale economies, very low base productive sectors. So we need to develop our economies and we need to create the self-reliance through regional economic integration. And South Africa has been at the forefront of this regional economic integration agenda, and it's part of our national development plan and it's part of our national priorities as well, because we need to create an Africa that is able to compete globally and integrate properly into the global trading system. Currently, Africa is sitting at the periphery of global trade at a mere 3% of total global trade, which is not sustainable in the long term. And when you look at continental integration, it's about achieving both political unity and coherence as well as economic integration as well. And for us as South Africa, we try to develop or promote a development integration approach, which is more about broadening integration as opposed to deepening integration. So it includes market integration, which is a core element of our integration agenda. But it's also based on the premise that you are not going to be able to make meaningful integration developments if you're looking at market and tariff liberalization only. So for us, it's about enhancing cooperation in industrial development as well as infrastructure development, which are core components to actually setting a solid foundation for a credible and sustainable integration of Africa.
Chris, I saw you nodding your head there. I'll come back to you in a moment or two. But maybe if we can cross to Ali Khan. You're with us from our Nairobi studios. You've certainly been able to monitor what this regional integration does do for a company's investment case.
Absolutely. I think, as you mentioned, the EAC has been a bit of a poster child when it comes to regional trade and regional integration. We certainly have a lot of challenges, but what this has meant is this very technocratic approach to non-tariff barriers has proved a launching pad for Kenyan corporates to expand in the region. So I think you've already seen a consequence of a more liberalized trading bloc here in East Africa. Via the Kenyan businesses expanding regionally all the way up to South Sudan. Obviously plenty of volatility up there, but they've really expanded their footprint. If I can also track back to your first question, I think looking at political risk in Africa, it's become very dynamic, it's changing, it's very fluid. I'll mention a couple of things. Ouagadougou was, I think, an important warning signal to sub-Saharan African incumbents. And already that message has resonated in Kinshasa. I think the street has a voice which it did not have before. And many long-serving leaders are slightly deaf to this quite important change. And I think when you look at Nigeria, you see the consequences of a misreading of political risk, and you see the cost to an investor. I mean, since the beginning of the year, investors have dropped about 40%, stock market plus currency depreciation. This is this is a substantial hit. And I think one's got to look at it and say to oneself, in Nigeria, we've got a laboratory experiment. We've got a growing insurgency. We've got an election where people are neck and neck. And basically, money is voting with its feet and pressing the ejector button. That's just a point I'd like to add.
Keith, maybe this is a point in time for us to come to you here, because with regard to this regional integration and opening up your borders for increased trade as well as movement of staff, does it also come with the potential risk of increased movements of these insurgency and terrorist groups?
I mean, everything always comes with that. I mean, in terms of the terrorist groups and things of that nature. But I think people need to be comfortable operating on the continent. I mean, Thomson-Reuters is a business. We've expanded tremendously in the continent, in our Nairobi office, our Lagos office specifically, on the business side of our business. And we weigh the risk, and we say that the opportunity is bigger than the risk. And part of our job is to enable Africa's success, as we provide a lot of the information, a lot of the analytics to make those decisions. And so we can help facilitate business on the continent, and we have to be there to do that. So we understand the risk, but it's one that we think is worth telling the story.
Chris, from your perspective, the role of business, because yes, government can do so much when it comes to policies and regulation, but with the role of business, are they there to help encourage this transformation, or should they be spearheading these initiatives?
I mean, I think one of the most important roles of the private sector and business is to actually help unlock the Africa opportunity, right? So the issue we face in many of our markets is that African economies are seen as purely commodity-driven economies. So right now you're seeing Nigeria that's being impacted very badly because of the lower oil prices. But I mean, if you analyze the Nigerian economy, you'll find that oil is in fact not the largest sector in Nigeria, right? So I think the role of, for example, us as Barclays Africa is to really help unlock local markets and help free up local markets. Regional integration is a really important part of that. If you look at what the East African countries are trying to do, by integrating themselves better and therefore creating a larger economic bloc that the world can trade with, is really important. And I think the role of the private sector is certainly to, embed ourselves, to become systemic in these markets, and therefore facilitate, both trade as well as the growth in financial markets.
What about the issue that Claudia highlighted when it comes to industrial workforces and building those up? Are we falling behind here, Keith, where we're still so heavily reliant on these commodities that we're not really focusing on the skills development front?
I think there's a lot of work underway in multiple African countries on the skills development specifically. I think Africa as a continent has woken up to Chris's point of we can't be so reliant on our commodities, and we need to educate the rest of the world, and to Chris's point again, sort of unlocking the opportunity. When we look at why, to Ali's point of why people are pulling their money out of Nigerian equities right now, it's all about the perception that falling oil prices are going to hurt these companies. But to Chris's point, there's other industry, there's a lot of growth in Nigeria just coming from a rising population, a lot of construction boom in Nigeria. There's other things going on besides the commodities, and the skills development piece is coming along. It's probably not coming along as fast as anybody wants it to, but it's coming along.
Claudia, to come back to you, Keith mentioning there that obviously things are coming along. Everything is working in our favor. And the big question that I know that you were keen on answering is that with all these things that are working towards our benefit, are we capitalizing on them well enough?
Well, the intention is to be able to capitalize on it in the long term. It's part of the vision that we have for a prosperous continent. But what is important is sectoral cooperation and coordination amongst African countries and regional economic communities, so that we can really maximize on the opportunities that we have to be able to industrialize our economies, because it's only through industrialization that we are going to be able to sustain our economies and actually grow and participate better in the global economy. And in order to do this, we need to look at regional industrial value chains. We need to build complementarities between member states, and we need to create a larger regional market and economies of scale. Realistically speaking, we've got 54 African member states with different levels of development, and it's about trying to create a good balance between the national priorities and the regional integration priorities. But in order to create this regional economic integration agenda that is going to be meaningful to African economies, it has to be founded by supportive and adequate infrastructure development, as well as industrial development, building productive capacities, diversifying economies away from exports of raw commodities and just being mere importers of value-added products.
I want us to get into that infrastructure commentary, and maybe this is a good point to bring Ali in, because you can open up your borders and want to increase access as well as inter-regional or inter-African trade between these ports. But if the infrastructure isn't there, Ali, nothing's actually going to happen. From your perspective, the East African community of countries, how are they managing to jump over this particular hurdle?
In East Africa, and particularly in Kenya, there is a massive commitment to a very bold infrastructure rollout, from the roads, the railways. You might remember more than 100 years ago, the British built the old Lunatic Express. More than a century later, the Chinese are now putting in a new railway which is intended to go all the way to our East African partners. So there is plenty of momentum building. One of the big missing ingredients was a lack of capital for much of sub-Saharan Africa. We learned last year from the Eurobond market in particular that capital is not the challenge, it's available. The issue is going to be now execution, making sure that the money is spent where it should be, not doing a Ghana and spending the money on salaries. It's a new set of challenges. But for us here in East Africa, we are all really excited to see a lot of momentum behind this rather bold infrastructure rollout. My one issue with our rollout, infrastructure rollout here in East Africa, is that it is necessarily a double down on oil. I'm not convinced oil is going to recover anytime soon, and therefore I think we might need to recalibrate our infrastructure plan a little bit directionally. But otherwise, it really is a no-brainer in terms of value creation, job creation. You can go around all around Kenya, wherever a new road goes in, real estate values spike, businesses start, and it's really elementary economics. And I think it worked out more than a century ago in the US, and it's going to work here in Africa as well. But the key, I think, remains execution.
I will get into your issues regarding the oil price in a moment or two, but Ali, just to stay with you, with regard to execution, are public-private partnerships the answer?
I think they are the answer. I think obviously one of the issues here is a capacity within our 54, 55 governments. So, you know, there's a lot of commitment to the private-public partnership here, but we're still working through the rules and working through the dynamics of it. But I think absolutely what's clear is that we've got to be innovative. We've got to look at multiple different models, and there is no harm in using many different models at any one time. I think the first big PPP transaction in Kenya will be a toll road, and I think that's what's going to happen within the next 12 to 18 months.
I'll tell you what, we don't want to bring up toll roads from a South African perspective, hey? That will get a lot of people writing and up in arms. But Chris, to come to you, PPPs, if we can latch on to that discussion, do we find that at times when government and business want to work towards driving infrastructural development on the continent, that they don't appear to be singing from the same hymn sheet? I
don't think that issue is because of the willingness of the private sector to invest in these projects. I think it's more around the credibility of some of the local institutions in terms of, you know, delivering in the long term. You know, if you look at many of our markets, you know, across Africa, and this has been mentioned already, the lack of infrastructure is severe. It's not unusual to have countries with a level of electrification, and you know, we're spoiled here even with Eskom.
But we still complain about the load shedding.
We still complain about the load shedding, but I mean the levels of electrification that are 15%. Now, essentially what that means is that your country is the story of one large city, and beyond that, it's very hard for business to reach consumer markets. It's tough for people to go and build factories. So I think the willingness is there. What's needed is a clear direction from governments and probably support from some supranational organizations to actually make sure that there is credibility in long-term projects. And then I think you will see the private sector actually stepping up and investing. And some proof of this is the fact that, you know, African countries have been successful in the international Eurobond markets for large amounts, despite being frontier markets. So I think the evidence is there.
The capital is there. It goes back to the issue of execution. Keith, maybe if you can give us your highlights on the energy scenario. We know that Africa has been dubbed the dark continent for many reasons, including its lack of power supply. But there are sweet spots like the likes of Nigeria, where the privatization of such a sector has actually helped boost the energy crisis.
Absolutely. I mean, economic growth on the continent is going to be dependent on whether or not electrification, power on the continent, and that's, you know, probably bigger than political stability, is whether or not you can physically operate in an area. If I'm a big corporate and I want to put in a factory somewhere, I need to know that it's going to have sustainable power. I need to know that it's there. And I think you're right, as Nigeria has been talking about privatization of energy for a long time, and now they're starting to make great strides towards that piece. It's just, you know, it has to happen, right? There has to be the power there. And I think other African countries can look at that and say, we can make a public-private partnership work, especially in the energy sector, especially in the transportation sector. Those are where private sector can get involved and make a meaningful difference.
Claudia, I take it you agree with the sentiments. The funding is there. The problem is the execution and the discussions taking place between the public and private sector.
Right, and you know, Africa's actually embarked on this ambitious infrastructure development program known as the Program for Infrastructure Development in Africa. And part of that is the Presidential Infrastructure Champion Initiative, which is South Africa is actually chairing at the level of the African heads of state. And it's basically looking at some of the high impact projects that can be implemented relatively quicker and also create those necessary linkages that we need. So for South Africa, we're looking at the North-South corridor, and that's extending now all the way to Cairo. So it's about trying to improve and create adequate and reliable road and rail infrastructure, but using a development approach that will unblock some of the other development challenges in that process. So the execution is going to be critical because, of course, if you look at the cost estimates for some of these projects, no national government really can prioritize some of that funding. So it's about looking at creative and innovative ways of raising funds through public-private partnerships, other models that may be available. But more importantly, it's about making sure that we've got bankable projects that will encourage and attract investment into these projects.
One of the opportunities that you did allude to earlier on, Chris, was that Africa is obviously a very commodity-rich country, but we do have innovation and intellectual property, which is something that is booming. But I want us to zone in onto the resources space for a moment. Oil and gas has been highlighted as a huge opportunity for the continent. Are we still dilly-dallying and not driving towards extracting the value and the opportunity posed by these natural resources?
Well, I think there's been a lot of excitement around it, right? And if you look at specific examples like Mozambique, I think international companies are very well geared in that country to really make it happen. And if all goes well, I think Mozambique's economy will grow drastically over the next 5 to 10 years as a result.
Is that also because the government policies are in place to allow for multinational companies to come in and help contribute economically to the country's growth?
Yes, I think so. But I mean, I think it's also less complicated when a country's economy is very much dependent on one particular sector. And in Mozambique's case, you know, it is at the moment. Yes, things will grow in the future, but I think the base for that economy is exactly that. It's gas. We have other examples of that as well, where you know, economies are trying to build a diversified type of platform, such as in East Africa. Kenya comes to mind. The reality is that there's a lot of appetite from the private sector to invest in these projects if they are bankable projects. So I don't think there's a lot of dilly-dallying, and certainly the involvement of the Chinese in many of our markets shows that the opportunity is there. I think there probably is scope for more South African involvement, for example, across the continent.
You mentioned a very important word there, bankable. And I want to come to Ali Khan, who had very negative sentiments with regard to the oil price. Ali, given the fact that, as mentioned, we are a very commodity-rich continent, we rely a lot on what the price in the market it actually places on our particular commodities, and also digging them up, sending them across our borders, and then importing back when they are final good materials. Is this a significant concern going forward, especially what we've seen in the significant depreciation of the oil price?
So first of all, regarding the oil price, there's no Hail Mary pass coming. We're in a situation where there is a surplus of supply. And I just don't see the oil price recovering materially beyond the recovery we've seen through today. And I think this is an important point to make across Africa. And I think the markets, particularly in Nigeria, are seeing it for what it is. And I tend to follow the markets before I follow anyone's advice. And there's a very clear message coming out of there. And I think that is ultimately that, you know, this oil price is going to stay depressed for 24 months. And it changes a lot of dynamics. It moves, money flow is already moving, as you can see, into Johannesburg, into Egypt, and into Nairobi. I think that trend continues. And I think it boosts places like Kenya, where the consumer, if you look at the Kenyan economy, it's when the average Joe who's not earning very much has an extra couple of dollars in his pocket that our economy really booms. I'll take you back to 2007 when we were growing at the fastest pace since independence. So I think we've got an inflection point that's happened across the continent. It's moving away from the commodity producers in favor of those who are consuming those commodities. Going back to your final question about beneficiation, I think, you know, in many of our countries, it's held up like a mantra. We take the example of coffee. We export more raw coffee. We export about $2.1 billion worth of coffee, and we're re-importing $3.7 billion from Germany alone. I mean, we've got a number of these situations, and I think in order to address this, we've got to do it at a continent-wide level. Individual countries can't push against this tide. We've got to do it at a continent-wide level. But the problem is, I think, also that we've got to organize ourselves better. We've got to understand the national interest, the continent's interest, much, much better, and be able to sort of push through that agenda. And I think when that happens, that will be a major tipping point. Some of our institutions are very aggressively pushing that forward, like the African Development Bank, for example.
Keith, you were nodding your head in agreement there with Ali, so I take it that you believe that we can move forward to this, but are we a long way off?
I think it's going to take time. I don't want to sugarcoat it. It is going to take time. I think the integration piece adds to the political stability. As more countries integrate with each other, and to Ali's point, it has to be massive economic zones going all in the same direction to reduce that reliance on specific commodities. When I think of the commodities issue and I think of the infrastructure projects that are going on in Africa, I also don't want to overlook the option and opportunity in Africa for the knowledge economy as well. I think people look at we need to follow the recipe of the Western world or the industrialized world. We need to go from agriculture to industry and not rely so much on our commodities. But Africa has a huge potential in the youth of the continent to really skip forward and be powerhouses in the knowledge economy. You look at the Rwanda agenda and what they're trying to do, and trying to not just necessarily focus on power, but focus on internet connectivity, focus on projects and development around the knowledge economy. And I think, again, that takes the integration of these countries together to make that happen as well.
You leave it on such a poignant point there, and I think we will delve into that with regard to the opportunities that technology does present. But Claudia, just to wrap off this segment with you, in a perfect world, this commodities demand, wouldn't it all be coming from Africa? We would supply and also have the demand for our own commodities in order to boost infrastructure, which would also power energy and also get industries going. It almost seems as though it's a cycle.
It is a cycle, and I think if one of the lessons that we can learn in this process is that it boils down to Africa must industrialize. If we're really going to be meaningfully trading with one another and with the world, we need to build our productive capacities. We need to diversify our economies. So for me, it's not about whether we're in the right path. I think if you look at the fact that Africa is the last frontier for growth, as it's been dubbed by many economists, it's the second largest growing region in the world. With most countries averaging about 5.8% of projected growth. It's not about whether we're on the right path. I think for us, it's more about sequencing what we need to do to get there. So we need to industrialize, we need to build complementarities, and I think we need to build on each other's strengths and look at creating regional value chains. And in that infrastructure development program, you start looking at how we can industrialize using the infrastructure development needs of the continent by sourcing local and regional inputs into that process. So you're actually trying to leverage your infrastructure or your industrial development using the basis of our infrastructure needs to connect the continent.
That's a good place to leave it for this first half, but we're going to take a short ad break. We'll be right back after this.